Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 1st, 2025, and we're diving into Constellation Brands' Q1 fiscal 2026 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Constellation Brands, a leading producer and marketer of beer, wine, and spirits, has just released their Q1 fiscal 2026 earnings. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the top line. Constellation Brands reported net sales of $2.515 billion, a 6% decline from the previous year. Despite this, the company achieved a comparable EPS of 22 cents. John, can you elaborate on these figures?
Absolutely. The decline in net sales is primarily due to softer consumer demand and the impact of divestitures. However, the company managed to deliver a comparable EPS of 3.22 cents, which is above the forecasted EPS of 34 by analysts. This indicates strong cost management and operational efficiencies despite the challenging environment.
Beer business performance. The beer business remains a stronghold for Constellation Brands. They reported net sales of $2.234 billion with an operating margin of 39.1%. John, what are the key drivers here?
The beer business continues to outperform, driven by strong brand health and marketing investments. Despite a 3.3% decline in shipment volumes, brands like Modelo Especial and Corona Extra maintain their top positions in dollar sales. The operating margin, although slightly decreased, reflects the impact of increased costs and strategic marketing investments.
Wine and spirit segment challenges. Moving on to the wine and spirits segment, Constellation Brands faced a significant 28% decline in net sales. The operating margin also turned negative at minus 2.1%. What challenges are they facing, John?
The decline is largely due to the Svedka divestiture and weaker consumer demand in mainstream price segments. However, the company is focusing on higher growth, higher margin brands, aligning with consumer-led premiumization trends. This strategic shift is expected to stabilize the segment in the long run.
Strategic initiatives and capital allocation. Constellation Brands has been proactive with its capital allocation. They repurchased $381 million in shares and declared a dividend of 1.2 cents per share. John, how does this reflect on their financial strategy?
The company is committed to returning value to shareholders while maintaining a balanced capital allocation strategy. The increase in free cash flow by 41% to $444 million, despite an 8% decrease in operating cash flow, highlights their efficient cash management and strategic investments in brewery capacity.
CEO and CFO insights. Let's hear from the leadership. CEO Bill Newlands and CFO Garth Hankinson provided insights into the company's performance and future outlook. John, what did they emphasize?
CEO Bill Newlands highlighted the company's focus on executing key initiatives despite socioeconomic challenges. CFO Garth Hankinson emphasized their commitment to maintaining a strong cash flow and advancing capital allocation priorities. Both leaders are optimistic about the company's strategic direction and its ability to navigate current headwinds.
Key takeaways. In summary, Constellation Brands has shown resilience in a challenging market with a focus on strategic initiatives and shareholder returns. John, any final thoughts on their investment prospects?
Constellation Brands remains a strong player in the beverage industry with a robust portfolio and strategic focus on premium brands. While challenges persist, their proactive approach to capital allocation and market positioning makes them a compelling investment opportunity.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Constellation Brands' performance in the comments below.